Good morning, everybody. Thank you very much for joining us today. We're exploring plastic packaging tax today, a new tax which comes into force next month, April, which is fast approaching 2022. As well as supporting the UK's sustainability strategy, the tax is a revenue raiser, and HMRC estimate that it will raise about £250 million per annum. We think it has more of an impact than that, and we'll explain why. Let me introduce you to our speakers. Andrew Thurston, our resident Customs and Excise Duty expert. If you've joined us before, you'll know that Andrew and I are passionate about imports, exports and Brexit, and we are particularly interested in the impact that the plastic packaging tax is going to have on importers. We're also joined, we hope, by Alistair Wilson, who's having a few technical issues joining us today. But Alistair is a partner at Tate Walker, and he specialises in the manufacturing sector, and he's a tax partner. And he's going to talk to us about the impact on the manufacturing sector and look at the practical implications. And then we're also joined by Mark Lemson-Taylor, a partner at McIntyre Hudson. Mark is an advisor to the food and agricultural sector, and he specialises in sustainability issues and general environmental governance, and is advising and speaking regularly about plastic packaging tax. So if we go to our first slide, let's look at what we're going to be talking to you about today. We're going to look, Andrew's going to take us through an overview of the tax and the technical implications. He's then going to look at importing. We're then going to be joined by Alistair to talk about manufacturing. Mark is going to be looking at farming and food producers. And then we're going to look at recycling and the actual returns that businesses are going to have to submit. So Andrew, over to you. Thank you very much.
Thank you, Alison. So if we look at plastic packaging taxes overall, these are sort of things that you sort of need to consider if you're whether you're going to be impacted by the new tax. So, do you manufacture or import plastic packaging components, or do you complete the last substantial process on a packaging component? We'll talk about the last substantial process in a moment, but that's important to establish the sort of tax point for this tax. If you do any of the above, you'll need to maintain records and consider whether you need to register for plastic packaging tax. Not necessarily on the 1st of April when it's introduced, but potentially further down the line if you hit the threshold. So from the 1st of April, plastic packaging tax will be introduced in the UK. There are similar taxes going to be introduced across Europe, but in the UK we're sort of ahead of the game in that respect. It's designed to encourage the use of recycled rather than new plastic within the plastic packaging. So its intentions are good. It's trying to change business procedures to try and introduce more recycled content into plastic packaging. As for the law, it's applied under the following. So Part 2 of the Finance Act 2021, Plastic Packaging Tax General Regulations 2022, and the Plastic Packaging Tax Description of Products Regulations 2021. So they're the basis for everything that we're going to talk about today. The actual tax at the moment is £200 per metric tonne. If you're below the threshold, you don't need to worry about it, but above that, you're going to need to consider the impact that the £200 is going to have on your business. So when you're going to be liable for the tax. So a liability arises when a chargeable plastic packaging component is either produced in the United Kingdom by a person acting in the course of a business or imported into the United Kingdom on behalf of such a person. So for point A, the tax becomes liable once the component has undergone its last substantial modification. The tax point is the point of production and not the point of sale. And that's an important thing to consider, especially when you're looking at when you need to register for the tax. So plastic packaging tax will apply to a finished plastic packaging manufactured in or imported into the UK if it contains less than 30% recycled content. We'll talk about the recycling later on, but if you've got more than 30% recycled content in your finished product, you're still going to need to register to record that fact, but you won't be liable to the tax. So just because you're above the 30% doesn't mean you have to ignore this tax. you still have to register and submit returns. It just means that you're not going to be liable to £200 per metric tonne. So what is finished plastic packaging? So it's a component that's undergone its last substantial modification. So for importers, you're looking at the various different components within that finished product, for instance. So if you're talking about a plastic bottle or a drinks bottle, you're going to include the cap, the label, the bottle individually. So we're not looking at this as a whole component finished item, it's individual components. So if you're manufacturing, you're looking at where you're bringing those goods in, are they going to be manufactured on site, etc. So where the last substantial modification happens as part of the packing or filling process, the component is finished after it has undergone the last substantial modification before that one. And Alistair will talk about that later as part of the manufacturing section. The business that undertakes the last substantial modification before the packing or filling process will be liable to the tax. And the business that undertakes the last substantial modification before the packing and filling process will be liable to tax. Let's repeat. So what is a substantial modification? So a substantial modification is a manufacturing process that changes the packaging component features. So the shape, the structure, the thickness, or the weight. So if any of those are altered during the course of the process, then that's the substantial modification. So examples of substantial modification include extrusion, so where raw material is pressed through a die, moulding, so it's put into a plastic mould to create the finished packaging, layering and laminating, so that's where we're talking about things like labelling. So you might be producing a label that's got a plastic coating on it. If it's laminated with plastic, then that is the point where the last substantial modification happens. So it's printed and laminated at that point. Things like forming, so a plastic sheet is shaped into packaging by heating, and finally printing. So if you're printing onto the packaging or onto a plastic sheet, for instance, then that would be classed as the last substantial modification, and that's where we're talking about things like the sealed plastic that goes on top of a food packaging. The printing point is the last substantial modification, so that's where the tax is liable. Not considered substantial modification, things like blowing. So if you're blowing that bottle into shape, it's not at that point where the tax is liable, it's the prior point. If you're cutting something into the shape, then that is not considered a substantial modification. So again, where we're looking at something that's printed and then is later cut as part of the packing process, the printing is where that modification and the tax point starts. Things like labelling, if all you're doing is labelling or sealing the goods into the finished packaging, then they are not considered a substantial modification. So items that are included within the tax are on the screen. So things like bottles, ready meal trays, crisp packets, pallet wrap. It's a varied range, and HMRC are expanding this all the time as companies send queries to them for confirmation of whether they're liable to the tax. So it's always worthwhile querying, certainly in the first few months, are my goods going to be subject to the tax or not, if you're not sure. Things like single-use consumer packaging, so carrier bags, nappy sacks. So it's not just necessarily packaging that you consider to be normal. There is things like bin liners. They're also includable in the tax. There are 4 exemptions that mean that the goods aren't liable to the tax. The first one is where the goods are being, the packaging that is used to transport those goods into the UK, they're exempt from the tax. So things like the shrink wrap around a pallet, the plastic pallets, those sorts of things, because they're classed as international transport, they are exempt from the tax. If the packaging is going to be used in aircraft, ship or rail stores, they're exempt from the tax. With the licensed human medicine, it is just the immediate packaging. So if you're talking about a liquid medicine, it is the bottle. Anything packaging outside of that is liable to the tax, but the bottle that's holding that medicine is exempt. And finally, where it's permanently recorded as set aside for non-packaging use. So things like whiteboard coating and stuff like that. So it might be considered to be taxable, but if it's not going to be used for that packaging use, then it could be classed as exempt. There are also exclusions, and there's 3 types of exclusions from the tax. So if they're used in long-term storage, so things like earbud cases, DVD cases, so they're packaging, but they're going to be used to store a product long-term, then they are exempt, they're excluded from the tax. Also things that are integral to the parts of the goods, so things like printer cartridges, because they are required to be able to use that ink or whatever, then they are excluded from the tax. And also things like point of sale presentation products are exempt, although they're going to be holding those goods and storing those goods whilst they're in the shop. They are purely designed to present those goods. So things that are excluded from the tax include things like filter cartridges, tea bags, dental floss cases. One of the things to consider is it might be that one of your product might be taxable for part of the packaging, but not the rest of it. So things like mascara, brushes, wand, and cap are excluded, but not the bottle. So it's just considering your product, the types of elements within that product, and are they fitting within the tax or not? Because this is where things get a bit complex. So if you deem that your products are liable to be to the tax, whether they meet the 30% threshold or limit or not, you've got to consider registration. So the threshold for registration is currently 10 metric tons per rolling 12-month period. So from the 1st of April, you're only looking at from the 1st of April 2022. So at some point during the course of the year, you might hit that 10 metric tons. If you do, then you have to register before the end of that month. So I think initially you're going to be looking at monitoring this on a month-by-month basis until you get to the point of registration. You could also look at the last 12 months, and if you find that during the last 12 months you're going to hit the 10 tons, then you know you're going to need to make sure that you've got the procedures in place, you've got the records ready so that you can register. So it's just making sure you're in a position to have those records in place. So if the company expects to exceed the threshold, then it must pre-register, like I said, before the end of the month that you're expecting to hit the 10 metric tons. And registration is required whether or not the packaging is liable to the tax. So even if it's got the 30% recycled content, you've still got to register. So working out the weight of the plastic packaging component. So there's 5 different methods that are in the guidance for establishing the weight of the plastic. And depending on whether you're manufacturing or importing, you're going to be looking at different types of methods. So there's the individual component method, where you're looking at the individual components within that particular packaging to establish the weight of that finished component. You might be looking at the sample component method, where you're looking at taking a sample of a production run or an import to establish the sort of the weight for that component based upon an average. But then when you're looking at manufacturing, you've got materials inputs and bulk weighing method, where you're looking at the components or the raw materials going into that production run and the amount of units that come out and establishing the weight from there. If you find that none of the 5 methods are suitable for your business, then you can apply to HMRC to look to use a bespoke method, but you will need to apply in advance to get that sort of accepted by them. The important thing to remember is that if the specification on the materials change within that product, then you do need to do a new assessment. So it's not just, well, we've done this in April 2022, we don't need to worry about it now. If you find that you changed the inputs, then you're going to need to do a new assessment. So if we take this as an example, so we've got material inputs method. So you've got 500 kilograms of raw plastic granules going through the production process. So that creates 245,000 plastic cups, which equates to 495 kilograms of the 500 kilograms. So you've got 5 kilograms waste of 1%. So by working out the inputs and the outputs, you've established that the actual unit weight of each cup is 2 grams. So For manufacturers, that might be a reasonably straightforward way of actually identifying the unit weights for the finished components. As part of the plastic packaging tax, you are able to defer it. So if you intend to export the packaging from the UK and you intend to export it within 12 months, you can defer the tax and put that through your plastic packaging tax return. So if the destination is not known at the time of manufacture or import, then you will need to account for the plastic packaging tax on your return. A credit will be then issued, or you request a credit on the return once those goods have been exported and you've got the relevant evidence to confirm that. If you find that at a later date, either yourselves or your customer have exported those goods, then you can claim the credit and you can also refund the plastic packaging tax to your customer. And I think that's an important part of the process, is just making sure that if you are selling to companies that you know are going to be exporting, that you've got sort of communication to make sure that they are able to provide the evidence to you to be able to give that credit back to them. Another important part of the whole process is due diligence. So you might not necessarily be liable to paying the tax, but as part of the regulations, you will need to be making sure that the supplier is accounting for the tax. So at some point, you're going to need to make sure you contact all the suppliers of the plastic packaging that you purchase to make sure that they are understanding of the regulations, that they've registered if they need to register, and that the tax is accounted for. Depending on whether there's less than or more than 30% recycled plastic, there are different sorts of due diligence considerations. Obviously, if it's more than 30% recycled plastic, you're going to need to make sure that you've got satisfactory records to confirm that there is the evidence that is meeting that 30% rule. And it's looking at, again, communication with your suppliers to make sure that you can get that evidence to be able to claim that exemption. One of the things that's a bit unknown at the moment, excuse me, is the invoicing. So at some point, HMRC will be issuing a statement that companies need to put on their invoices to confirm that plastic packaging tax has been accounted for. That's not going to be in place for the 1st of April. So it's just making sure that if you do register, that you notify your customers that plastic packaging tax has been accounted for as part of that invoice. So I'd say at some point they'll issue a statement, but this is part of the whole audit trail and part of the due diligence to make sure that everything is in place to account for the plastic packaging tax. If you've received goods that are liable to plastic packaging tax that's been paid, then you don't need to notify your customer that you're charging plastic packaging tax because it's a cost that's already been absorbed. If they ask, then obviously you just need to make sure that they do know that it has been accounted for as part of the supply. As with all taxes, there will be a penalty process in place. So it's all to do with civil penalties. If a company is determined by HMRC to be fraudulent, then there will be criminal penalties and possible prison sentences. But the initial penalty process is a fixed penalty of £500 plus a daily £40 penalty, excuse me, if you continue to fail in your obligations or you don't submit your returns in time. So it's just making sure that you register at the right time, you submit your returns at the right time, otherwise you could be subject to penalties. So if we move on to importing, so if we take this as a sort of an example, so we've got company A is a producer of bottled drinks in France. Company A then sells those bottled drinks to a UK-based company B, and company B sells to customers in the UK. So the first thing to consider is who's liable for the plastic packaging tax? Is it company A as the seller or company B as the buyer? And this very much depends on the Incoterms. So if the term of sale between company A and company B is delivered duty paid, so DDP, then company A is considered to be the importer. They'll be listed on the UK import declaration, and they'll be liable to the plastic packaging tax. They will then have to register if necessary and charge plastic packaging tax as part of their supply. If it's any other Incoterm delivered at place backwards, then company B will be listed as the importer, and they will be liable to any registration for plastic packaging tax and accounting for that. In terms of what needs to be done to establish if registration is required, so identify the method of calculation. So you're doing the sample component method, complete the sample weighing of all the products that you're imported, create some sort of standing file with the weights, so you've got that as a background information. I think eventually there will be changes to ERP systems to be able to add this weight in to make it easier for businesses to calculate the tax. But initially you might find that you have to do some form of spreadsheet or something. And you, potentially I would look at using the figures for April 21 to establish at what point during the course of 2022 you might need to register for PPT. When you're looking at things like contracts with suppliers or customers, you're going to need to perhaps look at how you're dealing with your suppliers, trying to make sure that they potentially change the type of packaging that's coming in, or the plastic that's in those finished products, and look at the requirement for providing the sufficient data. Certainly when you're looking at the 30% rule, is there sufficient data to claim the exemption? Otherwise HMRC could charge you for the tax. And it's looking at reviewing the sourcing of plastic packaging with the intention to increase the recycled content. In terms of mitigating the impact, discuss with your suppliers the options for increasing the amount of recycled content. The cost is likely to be higher, so it's looking at the benefits of doing that against the impact of the tax. Possibly switch to alternative packaging, to things like cardboard, and avoid the oversized packaging that needs additional secondary packaging to secure the product. So that's from an importing side of things. So if we move on to manufacturing.
Hi, Andrew and everybody. Unfortunately, Alistair can't join us today. He's unable to access his access the webinar. So Andrew's very kindly going to take over on the manufacturing side, but please bear with us because obviously we didn't expect this to happen. So thanks, Andrew. Just as an aside, Andrew mentioned penalties. It's worth thinking that if you didn't register and should have done, then that would be over £15,000 penalties just on the civil side if you failed to do that for 1 year. So it's certainly worth thinking about. Andrew, over to you, and apologies everybody. Thank you.
So if we move on to the manufacturing side of things now. So like Alison mentioned at the start, PPT is expected to raise about £250 million a year across all liable businesses. So what costs might you need to consider? So costs for components bought by you. So has PPT been added and who's paying that? Again, as part of the due diligence, it's making sure that the consideration has been put through and that you're adding that into your costs. So the cost for the products to be sold by you, are you adding that in and making sure that you're not losing part of your profit margin? Cost for compliance and to ensure penalties do not arise. So there will be an added burden on businesses to make sure they've got systems in place, the procedures in place. So this is an added cost to the business, and ensuring that the compliance cost does not exceed the tax due. So it's consideration of the whole liability for the tax and making sure that it's not excessively burdensome on the business. So different issues for different persons within the supply chain. So plastic packaging tax designed so that if operated correctly, it only arises once in the supply chain. So it should be the last of the packaging manufacturer, it may be obvious, or the person who makes the last significant modification. So if you're filling or packing and you're doing the last substantial transformation like printing, then it's looking at, is the tax point earlier in that supply or in that manufacturing process, and So that's for manufacturers, that's the consideration, is looking at the tax point. So in terms of the practical issues, it's ensuring that you know if you should be registered. So doing an analysis of the potential amount of plastic packaging that you're manufacturing in 12 months, and ensuring that you're capable of creating satisfactory and accurate information to be able to do the returns, and trying to avoid the tax being paid inadvertently by both. So again, communication between both parties to understand who is going to be accountable for the tax, so that you're not paying for it twice. So where does the tax point arise? So if you manufacture or import a plastic packaging component, or you do the last substantial modification, then you're going to have a consideration for this. Substantial modification, as I said before, is a change of shape, structure, thickness, or weight. It's identifying who in the supply chain is responsible for the PPT, and that's the key part, is looking at what you're manufacturing or bringing in terms of packaging, and identifying who's going to be liable and where the tax point arises. If you're manufacturing, it's on the point of manufacture, not at the point of sale. So different businesses will have different issues, and we've got 3 different examples to cover quickly. So we look at scenario 1, manufacturing and packaging. So company A is a UK manufacturer of moulded plastic packaging who sells to various companies in the UK and in the EU for use as packaging as part of their finished product. So company A also purchases shrink wrap from company B for use in containing the products for transporting to its customers. So who's liable? Company A is liable for the plastic packaging tax on the packaging it manufactures, as it's in a finished state when it's sold to its customers. For products made by company A, which are designated for export, it's likely that the PPT can be deferred, but it's will you need to defer it, or can you claim, or will you have to claim a credit? It's do you know that they're going to be exported? Company B is liable for the plastic packaging tax on the shrink wrap. So the supply to company A should have the PPT included, and may be able to claim a credit if company A pays the plastic packaging tax. Company A and company B may also be able to claim a credit if they show the plastic packaging has in fact been exported. So again, it's communication between both companies to make sure that the liability for the tax is minimised. It's in everybody's interest. So what needs to be done to establish if registration is required? So for company A, they're looking at things like establishing the type of method, so material input or the bulk weighing method, to calculate the total plastic used in a production run. For more than 30% rule, you're looking at production records to confirm the content of the recycled material. So if you're manufacturing, you should be able to establish that quite quickly. For the shrink wrap, it must be confirmed that the plastic packaging tax has been paid by the supplier if they're registered. But again, it's part of the due diligence confirming that. Confirm the quantity of the packaging per unit, and use production data to confirm the tonnage of packaging produced. And then check April 2021 sales figures to confirm if you need to register, and at what point during the course of the next 12 months you're going to need to register. With scenario 2, we're looking at a drinks manufacturer and bottler. So company F is a UK manufacturer of soft drinks who manufactures their own brand products for UK retailers and who bottles the manufactured drinks in plastic bottles. So company F has a bottle blowing machine which blow molds the bottles from preforms which have been acquired from a manufacturer company D. Company F fills the bottles and then adds ready molded plastic bottle caps. The drinks are shrink wrapped into branded packs of 6. The design of the shrink wrap sleeve is determined by company F. In terms of the plastic packaging tax, HMRC's guidance states that company F is not substantially modifying the blanks from company D. So I've talked about that earlier. It's in its finished product. They're also doing the filling as well. So it would be company D that would be liable for the tax. Company F would, however, be likely to have substantially modified the shrink wrap brought by company B when using that to create the 6-pack bottle packs. Company F would not have substantially modified the bottle caps. So where they're purchasing those caps in from a company, then they will have already had the tax paid at point of manufacture if that supplier was registerable for the tax. For scenario 3, luxury goods manufacturer. So we've got company X makes luxury consumer goods and packages those in boxes which are constructed of cardboard and plastic. The boxes are then wrapped in protective film from company B as an outer wrapper. The boxes then have additional protective disposable outer packaging, a sleeve, applied to ensure the goods reach the retailer in perfect condition. And this is something that's common. You'll have a packaging around a packaging, and that's from company B. The goods are exported around the world to retailers, and the company who also operates an online retail platform, which is direct to consumer. Company X will need to consider the liability for PPT in relation to the outer wrapper, because that's not classed as well, it's transport packaging, but it's not imported, it's going to be exported. Company B may be able to seek a credit in relation to PPT paid by Company X if it exports. So again, with exports, do you know that they're going to be exported at the point of manufacture? In that case, you can request a deferment, or it's requesting a credit later down the line. So it's understanding at what point is it going to be exported? Do you know it's going to be exported? Is it going to be exported within 12 months? So practical issues for scenario 1 is account for and pay for the plastic packaging tax on a plastic packaging component that is then exported. So you can either defer it if you know it's going to be exported and you know when it's going to be exported, or cancel the PPT if exported within 12 months, but you'll need the proof of export. So you're applying for a tax credit, so you'll need evidence of the plastic packaging tax paid by you if you're asking for a credit. You need to know what was exported, when it was exported, have evidence such as the export declaration, and then potentially refund your customer the plastic packaging tax that you're claiming a credit for. With scenario 2, the paid plastic packaging tax and then component modified by another business. So account for and pay the plastic packaging tax on a plastic packaging component that another business then modifies sufficiently to be the last substantial modification, which now means that the tax is liable and has become a new component. You can potentially claim a tax credit for the PPT you originally paid. So it's just looking at has it been substantially modified? Again, it's looking at discussions with your customers. What's going to happen to that? Is the tax liable at my point, or is it further down the line? In terms of tax credits, the sort of evidence that you're going to need is for evidence of export. Can you prove that it's been exported? So commercial invoices, evidence of payment, evidence of shipment, export declarations, your usual evidence similar to what you would need for VAT 0 rating. With substantial modification, can you prove the party now liable has paid the plastic packaging tax on the new component? If they have, then obviously it's discussing the sort of getting the credit on your return. What PPT did you pay on the items supplied when you are now seeking a credit? Credit can only be claimed by the original party who has paid the original PPT. So if you've incurred it as part of as a purchase, but you've now exported the goods, you need to contact your supplier and say, look, here's evidence that we've exported it. Can we have a credit for that plastic packaging tax? And then you're looking to set the credit off if you're the one claiming it on the return against future liabilities, or potentially asked to be repaid if deregistered for plastic packaging tax. Like I said before, due diligence is key. So it's being able to prove why you haven't registered. So even if you are below the 10-ton threshold, you're still going to need some form of records to confirm I don't meet that 10-ton rule. So it's not just, well, we know we don't do it. You've got to have that backup because HMRC could potentially audit you and ask for those sorts of records. So you've still got to do this process. So due diligence within the supply chain. So the manufacturer needs to inform its customers that any plastic packaging tax has been paid. So like I said before, at some point that will be part of an invoicing process, but you just need to talk to your customers and say, look, we're going to register at this point, plastic packaging tax will be payable at that point. The customers need to have confirmation that manufacturers paid it. Again, it'll be part of the invoicing going forward, but in the short term, it's just confirming that that is going to be included as part of the price paid. There are rules regarding what is recycled for the purposes of PPT. So you just need to make sure that if you are looking at the 30% rule, that you've got the evidence in place to be able to meet HMRC's obligations. Otherwise, you could be claiming a credit or an exemption, but later down the line, you fall foul of HMRC saying, actually, it doesn't. You may include obtaining copies of certifications of audits on suppliers and details of reprocessors as that sort of evidence. So getting the certification, the backup evidence is key if you're looking at the 30% rule. If the levels of packaging do not meet the registration threshold, then evidence needs to be retained by all parties. As I said before, it's just, you can't just ignore this. If you've got some sort of plastic packaging within your supply chain, you're going to need to do something to do with this new tax. As part of the due diligence process, there is secondary or joint and several liability. So if you are a customer purchasing goods that should have been liable to the tax but weren't because the supplier didn't register on purpose and you should have known better, then as part of these new tax regulations, HMRC could chase you for the tax as well, because you've not done your due diligence properly. So it's just making sure that you communicate with your suppliers to confirm, do they need to register? Are they going to register at some point? And has the tax been payable as part of that supply? So this is an important part of the whole process. One of the things as part of the regulations is looking at adjusting contracts. So if you've got a contract that agrees a fixed price, you are able to adjust those contracts to incorporate the plastic packaging tax that will be includable as part of the supply chain. So it's making sure that if you have got those sorts of contracts in place, that you discuss those with your customers and your suppliers to make sure that they are reviewed and updated to include the plastic packaging tax regulations. In terms of mitigating the impact, things that you need to do as a manufacturer is potentially look at changing the materials. The cost is likely to be higher, so it's assessing, what's the cost against the amount of tax that we're going to have to pay, and that's a big consideration for manufacturers. Switch to alternative packaging, again looking at cardboard and paper-based products, using reusable containers as part of the supply as opposed to single use, and avoid the oversized packaging, which creates additional secondary packaging. And finally, how will you track the information that you're reporting? So it's ensuring that the information is tracked as simply as possible. So it's making sure that you keep the process as streamlined as possible. We don't want to be spending days and days looking at this, but you've got to do something on it and create some sort of standing data to be able to populate the return if you need to register or evidence that you're not meeting the 10 tons. So this may not be best done by the finance team. So it might be easier if it's dealt with by procurement because they're dealing with material specifications, the build of job materials or job costing on orders, and tracking automatically via ERP systems. I think it's a consideration for businesses. Can we incorporate that into our ERP so we can just put the information in and then we can pull off a quick report to be able to do the return. But at some point, if you are registering, you're going to need that information for any PPT returns. Okay, so if we now pass on to Mark to deal with farmers and food producers.
Hello there, good morning. And I will through this because I think there's been a little bit of, obviously certain things will be duplicated, but if we just move forward, next slide, please. So, as we all said, an additional £200 per tonne of plastic. only for those that are not compliant, obviously. This does apply to plastic packaging used right through the supply chain. And obviously, we've had slight references to containing, protecting, handling, presenting, and delivering to single-use consumer plastics such as yogurt pots and the plastic bags apples are sometimes sold in. Obviously, within the food manufacturing sector, this is an extremely large issue and is already costing some SME businesses around about the 16 to 20 million pound mark, circa 50,000 pounds worth of direct cost to their bottom line. So proactive action has been taken since the beginning of the year to try and deal with this. And one of the things that HMRC has done with this is that the definition is extremely wide. And I'll just read out a direct piece on this. The containment, protection, handling, delivery, or presentation of goods at any stage in the supply chain of the goods from the producer of the goods to the consumer or user. This is a wide definition which will catch items that may be not even thought about, such as the plastic hooks that meat is effectively held on and then sent over to end-use suppliers, which then end-use producers, which ultimately then use it. So, and that also references to things like coat hangers, believe it or not. So it is a very broad definition in its nature. So I urge anybody on this call or others to talk to specialists about this, because you can get caught out before you know it. I won't reference too much about the detailed information. It's already been covered in depth by Andrew in terms of the 30% rule. And also about the evidence of the relevant components. Next slide, please. Due diligence will be carried out at the tax point. I think that's a really important piece. If it's not evidenced on the invoices, the business may be subject to a secondary liability. Again, the way in which this tax has been designed is it's been to catch people out. If it hasn't been correctly recorded or posted on invoices, you could be subsequently liable for the tax. Businesses will be expected to carry out due diligence and also in those tax calculations to HMRC. I do concur with Andrew that there is quite a lot of bureaucracy around this, and it may well be that procurement handles a lot of the technical side, but finance do the oversight of processing and making sure that the calculations are carried out correctly. So I would urge, particularly in those larger organizations, one department does the technical side and finance act as that support and control check to check what procurement are doing, because that way you make sure that you don't get caught out. There's a de minimis rule as well. Businesses using less than 10 tons of plastic packaging per year will be exempt. And an interesting win for the agriculture and food industry. There was a huge uproar over silaging and regarding the exemption, and a argument was put forward, and at the beginning of January they won. So silage wrapping was not deemed to be endpoint for plastic, which therefore meant it didn't fall into scope of the tax, which therefore meant it was exempt. But farmers already, and I think this is the thing that sometimes people forget, farmers already have the right or option to choose to pay £60 a tonne to have their wrap collected, so it can actually be recycled in any event. So the farming industry is already on the journey of sustainability and reducing their costs of effectively impact on the landscape and landfill and of course the wider environment. So that was a win. So it proves that lobbying from particular sector bodies can have an impact. So HMRC did reverse the decision that was already in place. So next slide, please. So how can we minimize the liability? So there are only 3 types of plastic products which do meet this definition of plastic packaging, but are actually excluded from the tax. These do not need to be included when calculating the total weight. Now, I know this was referred to earlier, but I just want to bring it into perspective from the food manufacturing perspective. Products which are designed to be used for long-term storage. So in the food industry, a lot of things are produced and then they're stored in containers, and then they're held in store for up to 1, 2, or even maybe 3 years, depending on their shelf life, and also use by end point users to then go into products ultimately for retailers. Also, materials that are an integral part of the goods This doesn't apply to ready meal trays because obviously they're disposable, so they're classified as something that's can be just be thrown away, so therefore that falls into scope, or are reused for the presentation of goods, i.e. Food, for example. Important point there is that the food industry in particular is looking at the way in which it does things, and tax is the method of all innovation, I think. And when they're suddenly faced with more additional costs, people become more innovative. So to give you an example, Premier Foods, with a well-loved brand of gravy, Bisto, has changed the way it uses its drums. Now that isn't plastic packaging, but that is to do with cardboard. So new drums now are 95% recycled cardboard, and the mainstream is 85%. So it just gives you an idea of, you can think innovatively without thinking, how can we just have to absorb this tax and just burden the costs? You can actually look at it from the perspective, how can we change the way in which we do things as a business and as an organization? And that very much has been part of the work that that I've been doing in my field, but also I think I've seen in particularly the food manufacturing industries, especially, they've been looking at innovative ways of changing the way they do things. So I know there's been some detailed work around the substantial last modification. Important point for the food manufacturing sector is that if the last substantial modification is made at the point where empty packaging is filled with a product, then it will be the last substantial modification prior to that. So it's an important distinction there between what it ultimately goes into. In my earlier point, in fact, that it's obviously that the good needs to be held in that, it's the modification prior to that point. So there is a few nuances within the food industry that this refers to. So next slide, please. So how can we actually minimize the liability? And again, there is a whole range of different opportunities. So reduce the qualifying plastic packaging, increase the recycled content. In particular, there are a range of different materials that are coming through the supply chain now. Mycelium-based packaging, some of these are more expensive at the moment, but those costs will invariably come down. Sugarcane is now being used as a basis of packaging, whereas before, historically, it was not feasible nor cost effective. And something that I think people should be fairly familiar with now is hemp bioplastic. And this refers to any plastic materials derived from renewable organic materials. And actually, from a carbon footprint perspective, which is extremely relevant to everybody who fall into scope under SECR or ESOS, or indeed for those that are just trying to get a firm basis of their carbon footprint and what it means to their business per se, it can actually sequester, i.e. absorb carbon up to 3 times faster than normal materials. So it is certainly something to consider at this time. Packaging redesign, as I just alluded to, a couple of the large food manufacturers already redesigning their packaging that you can see already. Incorporating materials that aren't falling in the scope of the tax, obviously glass, I just alluded to cardboard and paper. Some of this isn't obviously possible in certain industries, but again, it's worth contacting and liaising with your supply chain to see what they can do as well. It is in their interest as much as anybody else's. Smaller packaging, as I said, think Bisto. And the other point as well is that if you're investing in this work, this may fall into the scope of research and development for your organization, whether that may also provide a tax credit opportunity as part of research and development taxing. So I think there is an opportunity there if you're looking at whether it's a normal part of your business, and it may fall into scope there. So there are different opportunities to come out of the whole plastic packaging process. Next slide, please. What we can do now, and already it's touched on briefly about contracts and the fact that there is limited scope to pass on the cost of this to your customers under existing contracts, providing the plastic packaging pact actually does become chargeable, or that it actually does crystallize as an actual cost. The only risk with that is that those they will have other cost pressures and other cost bears. And this is the point about upstream and downstream margins, about where do you sit within the supply chain. You might be sitting right at the top, which means you've got more of a control. But if you're near the bottom or at the bottom side of the downstream chain, you're likely to have less control or less influence in what costs you can actually pass on. And that's particularly relevant with the rising cost of food and food inflation per se in the food and agricultural industries. So again, the perspective that we would give is think carefully about how you want to pass that cost on to your customers. Speak to a tax advisor while you're on this call, so you must be speaking to the right people. I definitely think looking at the clarity around what does or does not fall into scope is important. It means different things to different industries. As I said, silage packaging has come out of scope for agriculture. Benchmarking the use of your packaging or plastic packaging with other similar people in your industry, I think would be extremely useful as well. You may identify other opportunities that you wouldn't have thought about by not talking to your competitors, or at least looking at some benchmarking. Again, talking to professional advisors who invariably have a range of clients in those areas may be able to help. Having dialogues with your customers and suppliers absolutely makes sense. Records has been discussed at quite some length this morning. I will re-emphasize the scrutiny piece, and having that internal control check between your departments in your business, I think is going to be absolutely business critical. The last substantial modification piece, I think, is going to be equally important, because that will ultimately determine where your tax point is. And again, it means different things to different sectors. As I've just alluded to, in the food manufacturing industry, it's more complex than you think. So again, I would urge you to speak to the relevant advisors to talk that through, to make sure that you effectively don't end up having to pay the tax twice. And if you think about the series that McIntyre Hudson has put on, a week before last there was EV. This week it is plastic packaging, and last week was climate change agreements. The sustainability agenda for business is ramping up every single month now, and the government is taking this seriously. Incidentally, it is also happening in Europe as well. Italy is introducing a €450 tax per tonne on virgin plastic used in manufacture or importation of single use, which comes in place from the 1st of January 2023, for example. And Spain is doing something similar. The opportunity to look at the way in which you are dealing with the environment and environmental issues shouldn't just be seen in isolation, that this is a plastic tax, I therefore need to deal with it. It is an opportunity to look at your whole business and whole organization to see where can I save substantially, but also look at the long-term approach for the business in terms of the sustainability agenda. This is going to become a key strand to how you will be competitive in the marketplace from a business growth perspective, as well as a reducing costs perspective. And my final point really is talk to the people who understand the subject. Don't get caught out by the huge volumes of information online about this. Talk to specialists, because there is a lot of conflicting information on numerous websites about this. Talk to the specialists. And I think I have done my 12 minutes. So thank you very much indeed.
Thanks, Mark. I think we've got one final slide. That was really interesting, and particularly on all the different types of packaging and the innovation in the industry. Very interesting. We've got a few minutes left. I don't know whether we could go to the final slide, Andrew, if that's possible. Just to let you know what we are doing as a firm within this arena at the moment. Andrew has been looking, particularly for importers, working with overseas companies to analyse all those products and look at the weights, look at what's recycled, and see sort of where that registration threshold is. We will be helping businesses with their registrations and their returns. We've devised a rather snazzy piece to be able to gather all that information, which then links through to the information that would go on to the returns. So that might be helpful, and we are there to help you do that regular review to see if, you know, further down the line you should be registered. I've got a couple of questions which we'll just whiz through. Andrew, if the container is mixed between virgin and 30% recycled plastic bags, are we going to be taxed for the virgin bags and no additional tax applied to the 30% recycled bags?
Got two different types of packaging. You've got to look at them individually. So if you're importing bags that are subject to the tax, so less than 30% recycled, you're going to have to calculate the weight for those. And for the ones that are considered to be more than 30%, you've still got to calculate the weight, but they go on the return as an exemption calculation and are not subject to the tax. And that's where we've got, certainly with finished products being imported, you could have a packaging component that contains one item is exempt from the tax because it's 30% plus, but other elements aren't. So you can't just say, well, here's a finished shampoo bottle. It's got 50% recycled content in it. The bottle might be 50% recycled, but you've got caps, labels, packaging that holds that together. They're all going to be subject to the tax. So you're basically looking at all the individual components within that finished product and are they taxable or not, and do the calculations from there.
Thanks. And what about the evidence that HMRC would require to show that 30% recycled content? And does that link in with the packing list for containers for imports?
There will need to be some sort of product specification from the manufacturer, certification possibly, to confirm that what has gone into that finished product, does it qualify as recycled content? And the whole point of this is to test what HMRC is going to expect from a business. So if you've got products that you're importing that are containing more than 30%, then it's speaking to HMRC and say, is this sufficient for the purposes of qualifying for the exemption, to build up that sort of knowledge base and make sure that they understand what the level is and what business understand as well. Because the last thing you want to do is put 3 years worth of exemptions down and then find actually you didn't have the evidence that HMRC wanted. So where you're looking at the 30% rule, it's making sure that you've got that in place.
Thanks, Andrew. I'm conscious that we have a few more questions on the Q&A, and we will try to get back to you on those by email. We're kind of out of time now. We will be sending out a recording to everybody who registered, so you will have that. I know that a few people have said they had problems getting on to the webinar. Our email addresses are there, should you want to get in touch with us anyway, and we'd be delighted to hear from you. And it just goes to say thank you to Andrew and Mark for their presentations, and Andrew particularly for stepping in for Alistair. And we wish you a very pleasant day. Thank you very much again. Bye.
Thank you very much.